Ladies and gentlemen, good day and welcome to Matrimony.com's Q3 FY23 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Banerjee from ICICI Securities. Thank you. Over to you, sir.
Hello everyone. On behalf of ICICI Securities, I am pleased to invite you to the Q3 FY23 results conference call of Matrimony.com Limited. We have with us from the management, Mr. Murugavel Janakiraman, who is the Chairman and Managing Director, and Mr. Sushant Pai, who is the Chief Financial Officer. We will have a brief presentation from the management followed by a Q&A session. Over to you, sir, for your opening comments.
Thank you, Abhishek Banerjee. Good afternoon, everyone. Hope all of you are continuing to stay safe and healthy. In quarter 3, on a consolidated basis, we achieved billing at rupees 111.4 crores, a growth of 2.1% quarter-over-quarter and 3.8% year-over-year. Revenues were rupees 110.4 crores, a decline of 3.9% quarter-over-quarter and a growth of 1.7% year-on-year. The lower revenues were on account of subdued billing in quarter 2. Key highlights of the matchmaking business in quarter 3 are as follows. Billing at rupees 108.3 crores, a growth of 1.6% quarter-over-quarter and 2.1% year-on-year. Revenue at rupees 107.8 crores, decline of 4.2% quarter-over-quarter and a growth of 0.5% year-on-year. We added 2.38 lakhs paid subscriptions during the quarter, a decline of 1.7% quarter-over-quarter and a growth of 10.7% year-on-year. ATV for the matchmaking business increased 3.2% quarter-over-quarter and a decline 7.8% year-on-year. Is in line with our customer acquisition strategy. We continue to track the impact we create for our customers. We are happy to state that we have created about 20,678 success stories in quarter 3. Now coming to the marriage services business, billing were rupees 3.1 crore, a growth of 22.2% quarter-over-quarter and 139.7% year-on-year. Revenue was rupees 2.6 crore, a growth of 9.4% quarter-over-quarter and 97.4% year-on-year. We are growing on a steady basis for the last 6 quarters in a row, and the integrated strategy has been progressing well. Loss in the quarter was rupees 3.1 crore compared to rupees 3.3 crore in the previous quarter. On the billing and revenue outlook for the quarter 4, it's as follows. Matchmaking billing growth in quarter 4 will be better than the growth rate achieved in quarter 3. On wedding services, we expect a steady state growth to continue, and the losses will be slightly less than the quarter 3. Let me pass on to Sushant to comment on the key profitability highlights. Sushant.
Thanks, Muruga. At EBITDA margin for the matchmaking business in Q3 is at 17.8% as compared to 23.1% in quarter 2 and 24.5% a year ago. Marketing expenses are at rupees 45.2 crores as compared to 44.4 crores in quarter 2 and 41.6 crores a year ago. The main reason for the margin decline is due to the subdued billings of Q2 that impacted the revenue of Q3. Excluding marketing expenses, our margins in matchmaking are at 60%. In other income in this quarter, it includes the profit of rupees 5.8 crores on sale of land. So in this quarter, we completed the sale of land and that has been accounted in this quarter. Tax rate in the quarter is at 14.8% as compared to 14.3% in quarter 2. Profit after tax is at rupees 11.6 crores, is flattish quarter on quarter and year on year. Share of loss from Astro, which is our associate company, is at rupees 1.5 lakhs. Net profit margin has been stable at 10% plus levels for the last 5 quarters. Our operating cash generation has been good at about 16 crores for the quarter, signifying operating cash flow conversion from EBITDA at 0.85. This, along with the sale of land, has taken our cash balance to 309 crores. Return on capital employed annualized for the quarter is at 18.4%. On the outlook for Q4 margins, we expect matchmaking EBITDA to bounce back to the levels of quarter 4 of FY22. And we expect quarter 4 PAT to be at the same levels of quarter 3. Just one point to note that even though we had a one-time profit of sale of land in quarter 3, and even though we will not have that one-time profit in quarter 4, we expect the quarter 4 PAT to come back or bounce back and to be at the same levels of quarter 3. I would like to end with a customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by on behalf of the company unless it is required by law. We can now open for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead.
Yeah. Hi. Thanks for the opportunity. Couple of questions from my end. If I look at our ad spends over a slightly longer term period, pre-COVID, for every 1 rupee of ad spend, we were generating around 4.5 rupees of revenues. Now that has come down to 2.5 rupees, and this quarter ad spends are more than 40%. So what has changed so significantly that ad spend as percentage of revenues continues to grow from us, and despite these ad spends being elevated, growth in terms of overall sales or customers is not coming. And as we step into FY24, what are the budgets for ad spends? And lastly, what is the rationale for a proposal to utilize the sale of land proceeds on ad spends and marketing? Those were my 3 questions.
So if you just recollect on the sale of land, we had made a gain of about 5.8 crores, and the total collection, or rather total sale consideration, is 49.41 crores. So we have put this into a separate bank account as approved by the board of directors and shareholders of the company, and this will be monitored by a monitoring agency, and this amount will be spent towards marketing, and it has to be utilized within a period of 1 year. So whatever is our regular marketing expenses, this amount will be used towards that.
With respect to other questions, Mr. Prakash Kapadia, one is that the marketing spend, yes, it's at an elevated level. Because during the COVID time, because we had optimized the marketing spend because there is uncertainty and the whole industry, the marketing spend also has come down. The opportunity has gone back to the I-10 level. So today at this point in time, the marketing is one of our large costs. And if you look at excluding marketing, or margin still at a healthy 60%. For the next year, we expect that at this point in outlook is that the marketing spend may be at the similar level. However, we expect that the business to bounce back, the growth to bounce back. That will help our EBITDA margin, our billing and everything to move up actually. So the thing is that the current dollar marketing spend we expect at this point of time to continue at the current the value level.
And this ad spend is coming on the back of no change in competitive intensity. That is why, we think they'll remain same, and we are expecting some bit of leverage in terms of some additional sales growth.
No, we expect definitely sales growth. It's happening. We expect that to get better. But even at the current level of marketing spend, I'm talking about naturally the actual, not in percentage term. I meant in actual value terms. We expect a similar level of the spend to continue because of the increasing billing, and I think both the marketing versus compared to the billing and revenue to improve, and also it will contribute to the increase in EBITDA margin as well as the profit margin. As the current level of marketing spend necessitated because of the increased level of competitive activities, and that the marketing spend by the other players causing us to spend more than what is required at this point of time.
Just want to add, the percentage of revenues, if you see the last 5 quarters, it's been in a range-bound thing. It's about 38 to 40% of our revenues.
Compared to COVID, it was,
it's been stable for the last.
Absolutely.
Okay. And, in terms of the incremental, ad spend, you mentioned, it's been in a range of 38 to 40% last 5 quarters. But if I look at, incremental revenue earned or, incremental benefit translating to us in terms of top line, that is actually not really happening. So my question was more from that perspective. What is, driving this increase in ad spend? Because at the end, you call it customer acquisition cost, or you try and call it ad spends for building the business or competitive intensity. All of this has to translate to higher revenues for us. So if this is going to be the kind of revenue growth which we are seeing despite this elevated ad spends, then don't we think we should relook at the kind of ad spends we are doing to get incremental growth, is what I was trying to understand, Muruga.
Yeah. And basically, it's that we're looking at our majority spend is on the TV advertisement, and so we have to operate at a certain level of visibility and compared to what other players are doing. So if not for that the increased competition, the TV spend definitely much less than what we are spending. So that too kind of essential digital marketing as well as TV marketing. So something about TV marketing where most of the budget being spent, this currently is operating at a level much more than what is required. So which is again necessary at this point of time because of we're looking at a long term, and it could have the level of marketing spend, because while short term if you require you can reduce it also. We believe that may cause some long term implications. So at this point of time, we like to continue, though it's definitely a standalone basis, you may not need that level of marketing, but when you see other players are spending that money, and we think that it's not necessary to spend the level of marketing spend. Okay, so yeah, when tomorrow, in the future, if that level of intensity reduces, then that's not able to reduce our the TV marketing spend. So I don't know when that's going to happen, but at this point of time, this level of marketing we think is necessary in our business.
Understood. Thank you. I'll join back if I have more questions. Thank you.
Thank you. The next question is from the line of Sonal from Prescient Capital. Please go ahead.
Hi, sir. Am I audible?
Yeah, yes, you are.
Sir, I wanted to understand what on the ground are you seeing which helps you, some signals which basically help you believe that the demand is bouncing back? That's question number 1. And what is the growth outlook for top line or any guidance for the next financial year? Some ballpark there would be helpful. Thank you.
One is that post-COVID, we've seen that there's a sort of some drop in the profile acquisition. We see that now that the profiles have come back to sort of the earlier levels of acquisition what we used to have, and also based on the value stand, we are all the second week of February, we've seen how the trend in January and February. So based on the trend what we have seen up to February, then that gives us confidence that we are definitely bouncing back on growth. The outlook for next year, definitely next year will be definitely much better than the year what you are going through, because not only that the profiles are coming back, plus we're also taking some steps, and we see the early signs of those yielding results. So we believe the next year growth will be definitely much better year. Probably in a much better position to talk about that the next year, maybe during the next analyst call. But however, we definitely see that the next year will be definitely a much better year than the current year.
Understand. And sir, could you share what is your current customer acquisition cost, online, offline combined, if at all there is a calculation there? How much is spent to acquire a customer?
Yeah, no. The thing is that the majority of acquisitions are organic, and so it's we can't put that cost to it. And again, if you're looking at the digital acquisition, because the TV advertisement is a branding paid acquisition, so we can't put the cost per acquisition on the brand building and on the TV marketing spend. Digital, yeah, there is a cost per acquisition. We look at ROI and all, but again, we don't spell it out for competitive reasons.
Okay, so is it for a analyst community, is it fair for us to just divide your marketing, the entire marketing cost you report in your P&L by the number of customers you are acquiring in that particular quarter, and that should be the cost of acquisition for that particular period? Is that fair?
No, not. We're looking at it. The majority we acquire number of the number of profiles getting acquired on a quarterly basis, and majority of the profile acquisitions are people simply typing our brand name and creating a profiles, be it on the major acquisition happens through Play Store. So basically, brands in a way for large part of the market, it's a synonym with the category. So that way, the brand is very strong. Majority of profiles are we are not investing money. The TV marketing is something it's not you can account it for a particular quarter. It's the brand building. The brand is built over a period of time. We continue to invest on the brand. So that is not we just put the money and we're going to get everything getting on account of marketing thing that is happening at that quarter. If you don't the market, if it even completely turn off the TV advertisement, there will be some impact, very limited impact. But you are doing it because of keeping long-term interest in mind. But yeah, if you turn off the entire market TV budget this month, in fact, there is some minimal impact will be there. But so that way, it's not that everything activity this quarter. In fact, majority is not the activity this quarter at all. It's a long-term brand building. It has some its implication also, and short-term implication also be there because of the TV advertisement. But a digital, some spending required because you ensure that we are getting on the when people are searching a brand, we should be there, and so otherwise the competitors coming on the top of the keywords. To avoid those things, we need to have a bit for even our branded keywords as well.
Understand that. Okay, thank you. That's it from my side. Thank you.
Thank you. The next question is from the line of Anurag Purohit from Anived PMS. Please go ahead.
Yeah, hi. So my question is regarding the outlook given for fourth quarter. You mentioned that both EBITDA margin would be similar to what Q4 was last year, and PAT would be similar to what Q3 was, even after including the one-time gains. So just trying to understand where that positive leverage would come in, primarily because the billings are indicating to a kind of flat quarter on quarter for 4Q. So would there be a leverage in OPEX, and from where it would be?
So basically, what you mentioned was that if you look at the last quarter 4 on matchmaking EBITDA margin, it's around 20. Quarter 4. Yeah, quarter 4. So 22 plus 0.15. Yeah, 10%. See, the Q3 it was 17.8. This is including you're talking about that excludes that the one-time gain and all that. Yeah. So basically, we are moving back to the earlier level, which is the 22 plus 23%. That's the level of the margin group move back in quarter 4. That's without having that.
See, the land sale does not affect matchmaking. It only affects the enterprise level EBITDA. So what we have set as guidance is our matchmaking will come back to the quarter 4 level, which is what approximately 24.8 crores last year, which is 22.7% approximately. So the land sale does not affect that. But what is driving that is, if you just refresh what we told earlier, is that in quarter 2, the billing was lower for us and that had an impact on revenue in quarter 3. However, what is happening is based on the quarter 3 achievement as well as the quarter 4 billing estimate, we believe the revenue will be much better, which affects the P&L in quarter 4. So that is going to help the margin overall. But so basically it is going to, matchmaking is going to improve. That will negate that one-time impact of the land sale.
Okay, so already from January and whatever Feb we have seen, that gives us a certain amount of confidence on revenue front.
Yes.
Yeah, absolutely.
Yeah. And second on the subscription and the ATV, as in subscription has consistently shown a good growth, double-digit growth if I were to take the 9-month figure. Yeah. But ATV on YOY basis has been quite down, around 7% or so. Any particular reason for this? Is it purely on competitive intensity front?
It's a combination of the reasons. One is that we have obviously certain market they're offering discounted price, and we also have the new offerings like Jodi, which is at a much lower price. There's a combination of these factors and led to the ATV to go down. We expect that the ATV it may be at this level or maybe slightly go down as well, but we expect that the paid subscription to continue to grow at double digits. Because we are focusing on the customer acquisition strategy, and so that way that will drive that the paid subscription one. I think that's the focus. While that may come at some bit of drop in ATV, we think that that will help us to gain or grow in certain markets.
Sure. Thank you and all the best.
Thank you.
Thank you. We have the next question from the line of Shyamsundar Iyer from MICA. Please go ahead.
Hello.
Yes, Shyamsundar. Please go.
Hi. Thank you so much for this opportunity, sir. My question is about the revenue growth. So while we have seen that Matrimony has been doing quite well in the southern part of the country, I think Malayalam and all these places, Kerala, Tamil Nadu and all these places, are we seeing any growth in the markets where Matrimony is relatively weaker as compared to the competition, which most likely is the northern belt? And also, this is another question. How is Jodi doing as a business? There's no mention of Jodi on the call. So how is it contributing to the expenses or revenue building? These are my two questions. Thank you.
So in terms of it's a Matrimony, it's not only definitely we are a very strong player in South. Not only South, we are also a strong player in East, and also to a certain extent we are a strong player in West as well. The only market where we seem to be sort of fighting among other players is that the northern belt. Okay, that's where we have a lot to be done. So that's a long-term strategy for us. So with respect to again, the level of dominance varies from our strength varies from market to market. With respect to Jodi, it's still a small part of the business, and we are, at this point of time, we are not giving the break of various entities. It's still in a very early stage, and we are continuing to figure out, it's a new, completely newer segment, trying to maximize. So still at this point of time, nothing specific to talk about, and it's a small part of business. We continue to figure out and continue to explore various things to grow that segment as well. So, but again, as I said, for competitive reasons, we normally don't give a breakup of individual businesses.
Sure. So just coming back to my first question. So when you're saying that West, East, South are strong, North is a place that you're saying that is something that is being kind of a place where you're trying to tackle some issues and trying to grow. Has there been any inroads over the last few months or quarters that is something that can be looked forward to?
We have not made any significant progress, and while we've been operating at a similar level, because when you look at last couple of quarters, anyway, overall, we are also at a challenge because as I told you, post-COVID, we had some challenge with the profile acquisition. We see that now it's coming back to our earlier levels. We expect now things to get better. But the way where we stand, looking at where we stand, we definitely see things are bouncing back. And I think keeping the marketing cost at the level and with the revenue, we see that uptake is happening. We see that we'll be able to grow in all the market. Again, it's relative because it's not that a few percent growth will not going to significantly alter the positions in other market. Again, we don't have the final complete information about the competitor as well. So that being the case, overall we are growing across the market, but it's not to the level where we can say that we are making significant inroads in the north and all that. Because north is definitely long term. There's nothing going to significantly change in the short term, or nothing significant happened in the last couple of quarters. It's more of a similar level of reach and market share. The similar reach and market share at this point of time compared to what it was even few quarters ago.
Okay. Thank you so much for the opportunity. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1 on your touchtone phones. The next question is from the line of Sohail Rozani from SV Rozani. Please go ahead.
Hello, sir. Very good afternoon. Sir, there have been the quarter for which you are confident about is due to the billing thing, right? But what are the other initiatives you are taking for the next financial year? Are there any specific initiatives which you are taking, or something which you can put a light on?
Sorry, I think the line was not clear. If you could please repeat it again, because I think I missed some part of your question.
Surely, sir, I'll do that. What I would like to understand is what are the initiatives which we are taking other than that, because we are confident about quarter 4. Are there any other initiatives which we are taking as a company for the financial year 24? Any specific things which you could put a light on?
Yeah. Thank you. Okay. So one is that, as I said, the profile is one of the things. We see that the profiles are coming back to the earlier level, and that's also helping us to grow. Plus also, we continue to work on various strategies to drive the conversions. So all the things seem to be helping. So it's a more of a product improvement and the process improvement combined with the profile acquisitions seem to be getting better. So these are factors helping us to grow in the current quarter. And in terms of next year, we definitely have plans, and probably we can have a better question to talk during the next call. Yeah.
Thank you. The next question is from the line of Deep from B&K Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. So my questions were around our international plans. So those markets don't have a lot of competition is what I understand. So is there any plan to scale up those investments significantly, given that the competitive intensity is not reducing in the Indian market? So it would be great if you could explain a bit more on what are your plans.
In terms of your international market, international market is quite spread, and there's multiple countries, and also it's while definitely US is one of the important markets. Again, we continue to figure out how to grow various markets, including international market as well. But international market, in terms of the user base, that user base is not growing substantially and all. So that way it's more of the market. There is a good number of the Indians across the world. However, that market is not growing at substantial pace. Also, the complexity of the market is multiple countries, multiple things, and it's not one homogeneous or two. And some other countries become quite challenging to reach out to Indians separately. But again, there are things we do to reach out to NRI audience. We continue to figure out and continue to work on the way to reach out to more Indians looking for right partner. And so I would say that at this point in time, that's not a market we're seeing a significant growth at this point of time. So that way, yes, international market too, it's important market. We'll continue to work on the ways to get better on those markets. But I would say that it's not something like kind of we can do something quickly be able to gain some the market share and all. But unlike India, the avenues to reach out is fairly there, which is some of the market become a little complex because that's very from US, Canada, Australia, Singapore, so many countries. And so there are some challenges as well. So reaching out this market in an effective way. Because also the people that the media consumption patterns also shift that, so that way it's making it really difficult. But however, we are continuing to progress on the market, but whether we'll be able to grow substantially by doing some marketing strategy at this point of time, that is so. But however, we continue to, as I told you, it's one of the important markets for us. Our marketing continue to work on the ways to reach out more NRIs. But I wouldn't say that at this point we have something which helps us to make significant progress in this market.
Right. So thanks for that detailed explanation. But so would it be possible to give any KPIs or any numbers around those markets, maybe investments, maybe profiles that we have, or it's too premature for those discussions?
Yeah, I think it can, because normally we don't give a breakup or geography-wise, and so right. I would refrain from getting deeper on those points.
That's what it is. So the second question is, so if we can give maybe not numbers, but some qualitative idea on how is the elite matrimony segment doing for us? Are we seeing a slowdown there? Because if I understand right, we don't have a lot of competition there relative to the competition we have, say, in our 3-monthly or 6-monthly plans. The elite matrimony is somewhat of a forte. So is there a slowdown there, what you are seeing right now, which is leading to these benign numbers? If you could just give some idea of segmental growth, maybe just what it would still be helpful.
Yeah, the one thing that, elite is a small part of our business. So it's because we are talking about, when the people at the top of the pyramid is a very small percentage, but obviously the ARPU is very good in that segment. However, there are some challenges in elite. One of the challenges is that obviously, elite we get a lot of female members who enroll. So elite is a challenge for us with that, kind of getting a male member to enroll. So working on some, some plans and some strategies. So while as I told you, it's a segment definitely it's high ARPU, but the number of users are a limited number of users. While the challenge is like not having a sufficient number of male members. Well, you try to figure out how to get more male members. So there are plans to grow that market, but again that's something we are working on it. But in terms of overall elite contribution, it's small part of the business.
Right, sir. This is very helpful. Thanks a lot.
Yeah.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 at this time. The next question is from the line of Hinal Gada from ICICI Securities. Please go ahead.
Hi. So just one question on your capital allocation. Like, are we looking to, maybe return any, money to the shareholders, given that we have such robust cash flows, or, maybe anything in the inorganic space?
Yeah, hi, Hinal. Sushant here. We just concluded a buyback, a couple of months back, and we had returned 75 crores back to the shareholders. And we also paid a increasing dividend last year as well. So in line with that capital allocation policy, whatever is relevant and whatever call the board takes, we will do that as per whatever is required, from that perspective. So that's where it is. So recently, the giving back to shareholders was taken care of in the last year. In terms of inorganic, we continue to evaluate any opportunities that come by. Last year, more than a year back, we did an acquisition called Shadi Saga, which is in the marriage services space. Anything that comes that is interesting, we'll continue to evaluate.
Right. But so in the inorganic space, are we like kind of looking at it actively, or is that just something that's there on the back of the mind and we're just kind of looking at it as and when some opportunity comes in?
Only there is, as and when anything comes, we will look at it.
Okay, understood. Thanks a lot, sir.
Thank you. The next question is from the line of Manish from XYZ Associates. Please go ahead.
Hi. Thank you for the opportunity. You spoke about how the focus will be on growing the customer base, customer acquisition, and driving conversions. So I'm guessing in the process we will be resolving discounting. So just wanted to understand how ARPU has been trending over the last couple of quarters, and how do you foresee it playing out in the quarters to come?
See, the ARPU, has been sort of coming down because it's based on the customer acquisition strategies. We expect that trend to be at the similar levels, or maybe even slightly may come down as well. So we are working on how to get the more people to enroll the paid membership. So that way that the ARPU may come down also.
Okay, understood.
Yeah, the level also, because sometimes very difficult to predict on these things, because we have multiple customer segment, multiple the brand. So that way, I think for us that the focus always been that how to get more people to enroll. So even that has an impact on ARPU. So we think that maybe a right thing to do. However, it cannot give that how that's going to be the next quarter. So.
Sure. And I understand that you might be focusing on slightly weaker markets where ARPUs might come. How are the ARPUs sort of trending in your stronger markets down south?
Yeah, stronger market will continue to operate at LT ARPU. So.
Okay, understood. Thank you so much.
Thank you. Participants who wish to ask a question may press star and 1 at this time. Ladies and gentlemen, if you wish to ask a question, please press star and 1.
Yeah, if there are no more questions, we can end the call.
Sure. There are no further questions. I now hand the conference to the management for closing comments. Over to you, sir.
Thank you, ICICI Securities, for hosting us, and thank you everyone for joining this call. If you have any questions, please write to us, and we'll be happy to interact with you.
Thank you, Abhishek Banerjee and ICICI Securities, and thanks for everyone joining the call. So I look forward to interacting in the next call. Thank you so much.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your line.